Have you ever wondered what could happen if XRP ETFs reach $10 billion in assets under management? How about whether or not XRP price could ever fall back to $1 or less? You ever wonder about that? And what exactly is dilution? I think I want to tell you about that, along with a little bit about retail versus institutions investing in the crypto markets. All pretty interesting topics, and we're going to talk about it.
Check the mic and make sure it sound right.
And I hope the mic does sound right. What about this ETF reaching 10 billion? It says here that interest in XRP exchange traded funds is growing quickly after another product received approval. The Chicago board has approved the 21 shares XRP ETF under the XR ticker, adding to the list of funds offering exposure to the token. I want to first highlight that it says exposure to the token. It's not, let me repeat, it is not ownership of the token. The pace of inflows has surprised even industry leaders. Ripple CEO Brad Garlinghouse recently celebrated that XRP ETFs crossed $1 billion in assets in about 17 days. That's a whole lot of purchases of a whole lot of shares of a whole relatively lot of ETFs. And most of us, when we buy ETFs or anything in the investment markets, we don't want to feel like we're buying a car. Because we all know that if you buy a new car, the moment you drive that new car off the lot, unless there's some insane demand for it down the road, the depreciation value hits as soon as that front tire hits the exit of that car dealership. But when we invest in ETFs and other items that are investment products, we're hoping for them to go up. Unfortunately, that has not been the case for the overwhelming majority, if not all, of the ETF products. This here talks about $10 billion being the target within a year. That's a very short span of time. The reason I want to bring this to your attention is I mentioned dilution. What is dilution? Well, dilution in the financial industry refers to the reduction in the ownership percentage value and voting power of existing shareholders when a company issues new shares of stock. And in this case, we're talking about new shares of open ended exchange traded funds with XRP. So it's very easy to figure out. You have a pie. One person owns the pie and they're going to sell parts of the pie to the public. If 4 people buy the pie, they all have 25% of the net asset value of that pie. If 5 people buy it and they all have 20%, it just went down from 25 to 20%. If 10 people buy into the pie, it goes down from an original 25% ownership to 10% ownership in the net asset value. So that being said, the price of the pie hasn't changed much, but the net asset value of each share of that pie has. So when we see articles talking about selling $10 billion worth and making such phenomenal gains within 1 year, you can rightly anticipate, absent an increased value in the product, and in this case, XRP, the value of your exchange traded fund shares would go up if the price went up. Unfortunately, that's not the case with XRP either. So there's really no good news for these ETFs to go up in value. Will they go up in value down the road? Who's to say? I can't say. I would say yes, simply because XRP should go up phenomenally down the road. But we'll talk a little bit about that too when we talk about retail versus institutional investing, because institutions are moving in more so to drive the next phase. It says institutions have strong incentives to promote ETF products because they fit within compliance, marketing, and advisory frameworks. They also fit into fees. I get a video about that. Look for the cards on my videos because the videos address topics that I don't want to duplicate in this video. But if they promote your interest in the ETF products, they're not selling you XRP. What they're selling you is a piece of a pie that you will never be able to eat because you'll never own the XRP. But you will be able to sell your share of the pie anytime you want down the road. And depending on how many people hang around or how many people come on board, that's going to determine how much your piece of the pie is worth. So when we see so many additions of new shareholders of these ETFs, unfortunately, until things settle down, your net asset value is going down before it goes up. And the primary reason that's going to happen is because of dilution. This site shows that it's a big deal amongst hedge funds and professional proprietary traders and novices alike. I don't subscribe to this site, but there is a dilution tracker to help institutions and professionals in their investment strategies. Changing topic, can we expect the same type of price action from XRP? Could it ever fall back to a dollar? Well, in this article, it says that the XRP price has struggled to move higher even as the exchange traded funds continue to see strong interest. Well, we understand, hopefully, why the funds are not performing as well as the inflows. It's because the inflows themselves are hampering the performance. But what about XRP? On the Paul Barron podcast, they interviewed Zach Rector, and he said that the lack of price movement is frustrating but not surprising. Well, it's not surprising if you understand what's going on. According to him, the market is going through a sell the news phase that often follows major ETF launches. I don't necessarily agree with that being the cause for the price movement of XRP. What do I think is the price movement for XRP? I think it has to do with this topic right here. Who's really driving the crypto market? Nevertheless, in this article, Rector explained that the ETF demand has not directly pushed XRP's public market price higher because most ETF purchases are happening over the counter, not on public exchanges. Institutions own a phenomenal amount of value in XRP itself, and with that value comes ownership of a phenomenal number of XRP. And that thought takes us here to this article, from retail to institutions: who's driving the crypto market in 2025? That will be interesting to know, but now we're going to go into 2026. So whatever the trend is, we can reasonably expect it to accelerate. It makes the point that crypto markets are evolving and fast. In the early days, retail investors dominated the space. Yes, we front ran the institutions. However, by 2025, the tides are shifting. Institutional investors, family offices, and algorithmic funds are entering the market at scale. Algorithmic funds means bots. As you can see from this definition, algorithmic funds are a modern approach to investing that utilizes algorithms, psychology of the market, to make trading decisions. These funds employ quantitative models, high frequency trading, and artificial intelligence to gain an edge in the stock market. They analyze vast amounts of market data and execute trades at speeds far beyond human capability, often eliminating the human emotions from the decision making. Hedge funds have taken algorithmic trading to another level, using these strategies to exploit inefficiencies, optimize trade execution, and manage risk effectively. Probably very good at arbitrage as well, but not just hedge funds, people. Exchange traded funds by the big kahunas absolutely are using algorithmic funds. And that's why I do not agree that this decline in price is a consequence of what we read earlier, of going through a sell the news phase. No, that's not it. We're getting played. And when you're getting played and you know you're getting played, you can allow them to play their games, but you won't get played. The rise of institutional money in cryptocurrency over the last year, a new class of investors has emerged, professional firms with deep pockets and long term horizons. In other words, they can scoop up all the XRP, sell you an ETF, and wait you out. They're no longer just exploring crypto, they're actively deploying capital. So if they're actively deploying capital, do you think they're going to buy high or are they going to buy low? I think the answer is obvious. So while the ETFs are suppressing the price of the net asset values, each shareholder gains because an unlimited supply are being sold. Firms are waiting out XRP holders. Now, eventually, the supply shock will address that. But as was mentioned in the prior article with Rector, a lot of it is being done over the counter and not on public exchanges. And as one of my other videos showed, the Clarity Act, I believe it is, will require a maximum of 20% investment holdings, 20% share of XRP. So nobody, not even Ripple's going to hold more than 20% of the XRP out there, which I take to mean that institutions are scooping up the manipulated priced XRP while using a portion of their millions held to use their algorithmic funds to continue to manipulate the price so that they can get it all. And in so doing, they're trying to eliminate the front run that retail did by waiting retail out. And therefore, they're trying to buffer that supply shock by having a good coffer full of XRP themselves. And while they have that good coffer of XRP themselves, they're coming in at scale with robots and AIs and algorithms and still suppressing the price of XRP. So what do? Gorilla Grip. I'm DK Will. This is DK Will Talk About It. And I talked about it a little longer than I want to, but you still have a wonderful day. And make sure, if you haven't already, like and subscribe. If you made it this far, I love you more than those who didn't. Have a wonderful day.
Check the mic and make sure it sound right.